Curtis, you've got an interesting story because it has morphed. It's a story that started out one way and ended up another way and has continued to grow. In fact, you've probably started a whole new trend at Lifestyles that I want to get into before we get out of here today. But let's start with where you started from. Explain where you came from before you were here. You owned your own businesses and so on and so forth. Go ahead and share it.
Yeah, I actually started my career doing tax returns, believe it or not. So I was a CPA cranking out tax returns, did that for about 3.5 years. And I realized that it wasn't for me. Went into the staffing business, which is basically like a sales job. And
It's interesting, bean counter to salesman.
yeah,
Wow,
that was a tough transition.
That is a big transition.
Because I was not only a bean counter, I was an introvert, big time. So to try to sell something was definitely a challenge, but I muddled my way through that industry. In the last 16 years of being in staffing, I ended up starting my own business 7 years prior. So I had my own business for 7 years. We're doing well. One thing led to another. We ended up selling it. And so I was at a point in time where I wanted to start a new career. Wasn't sure what it was, but that's when I found Lifestyles.
And I thought that story is an interesting one. And I'm going to dig just a little deeper into that because you were partnered with a guy that was a friend of yours. You were working together. You said, hey, why don't we go out on our own? And it was you, he, and I believe his wife.
Actually, it was 3 partners.
Okay.
When we started the company, 3 years into the partnership, the 2 partners married each other.
Oh, there we go.
So overnight, I went from an equal partner to minority owner.
Uh-huh.
And then 4 years after the marriage, they got a divorce. So the kids in the divorce was the company. And so they ended up force selling the company in the divorce.
Did you learn anything from that experience?
Well, I learned a lot, to say the least. I had no intention after that experience to ever go into a partnership again. So for me, I didn't ever want to do partnerships. So when I joined Lifestyles, I was trying to be a solo owner-operator. Mm-hmm. But long story short, that plan wasn't quite what I expected, and I ended up being a lead and being a partner.
Well, let's talk about why the solo part didn't work. Let's pick up there. You came here, you took the classes, you got the information. I'm not going to give you the normal interview of, tell me what all you learned, because I think you're way beyond that. This interview is more about really the direction you've not only taken yourself, but you've led so many other people down the road. Leaders go places no one's ever gone before and send back maps, and you've got some maps of places no one's been before at Lifestyle. So want to get that down here. Yeah. First deal, what happened on the first deal that sent you away from being an IRO?
Well, I sold my business, deposited the funds, and was going to use the entire proceeds from the sale of my business to go buy my one property as a solo operator. And we did the calculations, and the returns on the property were going to be the same kind of cash flows that that I needed to live off of. Mm-hmm. And that was in August of 2008. And if you fast forward 2 months into the contract, October 2008, if you fast forward what happened back then, that's when the whole market collapsed. And out of nowhere, what money I thought was safe, what money I thought was in a standard bank account ended up being in a reserve fund that broke the buck. It had significant holdings of Lehman Brothers bonds. And so my entire proceeds from the sale of my business went away overnight. And so I was unable to close on that property because of that.
Yeah. So in that particular property, you had asked me to come take a look at it. I came in, stepped in, we partnered on the deal, and turned it around and ended up making a lot of money with it. So, lemons to lemonade, It came out okay. Yep. What did you do next? Because in that situation, it was just a bailout at that point. It really wasn't a business decision; it was a bailout. Yeah. What did you do next because now you're ready to make a new business decision for Curtis Haines? What did you
I tell you, just literally, I didn't know what I wanted to do next because basically I had no more money. I didn't know what my next direction was. I knew I could always fall back on sales again if I wanted to. But there was a point in time where you were so vocal to the members about now's the time to buy. And back then you weren't as active as buying properties, and all of a sudden you were like running around like a kid in a candy store. That caught my attention. And so when I started going on the acquisition road trips through Lifestyles, I'm like, man, there's something he's seeing that I clearly don't see. Man, he has so many years of experience. I got to have some faith in to just continue down this path of real estate. So when I found a property on a road trip, it's like, okay, how do I make it work? And that's when I talked to my mentors and I said, well, if you want to make it work, you're going to have to form a partnership and bring in families, other members into the partnership. So I literally, based on pure circumstances, fell into the role as a lead because I had no intention of doing that.
And I want to make something clear for the listeners because we roll past these things in these interviews so quickly, some people come to their own conclusion. You didn't lose your money in the real estate deal that you went into.
Correct.
Your money was hindered by the fact of the way the banks had dealt with all of your accounts. Am I correct on that?
Correct. It was in a mutual fund, and the mutual fund had significant holdings of Lehman Brothers bonds. So when the market collapsed, Lehman Brothers went bankrupt. And because Lehman Brothers went bankrupt, that mutual fund broke the buck and all my money went away.
Now, just for sideline information for people that might be sitting out there going, boy, I had the same problem. You actually got some of that money back, did you not?
Yes. 18 months later, so in my mind it was gone. 18 months later, I got half the money back.
Wow.
Yeah.
What a devastating
And then 10 years later, believe it or not, 10 years later, I got the last check back.
No kidding. You never told me that.
Yeah.
Part.
And it was about 70, it ended up being about 75% of my funds I got back. So
yeah, you never told me that.
Yeah.
Part.
10 years later.
That's a good story. 10 years later. Well, there's a heck of an investment. 10 years from now, I can get 75% of what I put in.
Yeah.
I'll go for that. I want that one, right? No, I'm done. I'm out. I'm not going to do real estate. So you went out there and you did your first lead deal.
Yeah.
And you syndicated, brought some people in. And something happened on that one that changed your future. It was interesting.
Yeah.
They wouldn't let you manage.
Yeah, that was the most frustrating part because I came from a very successful business. We were Inc. 500 fastest growing companies, top 10 best places to work. We had 40 employees on site and 60 employees off site. So basically I had 100 employees. And here I'm buying a small apartment complex with 4 employees. And the bank would not let me manage my own business. I had to actually hire a third party. That just blew my mind.
And you know, it's funny because I can laugh at this, but it's funny how little things change your life. So you were forced to work with a management company, but you were a little smarter than the average guy. You made an arrangement with them that they would be the back end of your business to qualify that there was a management company there, but you inserted yourself in the front end of the management to get to learn the business.
Yeah.
Tell us how you did that.
Yeah, I was fortunate enough to be introduced to a small mom and pop management company, and I was very upfront with him. I said, look, I do not want someone else to manage my business. I want to manage my own business. Will you work with me? And he's like, sure, I'll be happy to work with you. You can come on site, you can lease, you can learn the business. I'll give you all my materials. So he was very open to working with me. And so I sat in the leasing office. I leased. I answered the phones. I showed units. And about 6 months into doing that, I realized, man, this is the toughest gig I've ever experienced. So I right then and there, the light clicked on to me. Is like, I don't really want to do this day-to-day grind in the apartment business. And I started to take a step back and work more on my business and less in my business.
So what was the next step from there? That was a good learning curve for you right there, but it also gave you some feet on the ground education.
Yeah.
What'd you do next?
So was very fortunate. The transaction, the very first transaction was with a very large REIT. They liked the way I did business with them. It was a very smooth closing. So they called me up 6 months later and said, hey, would you be open to buying our property right across the street? And so I ended up buying another property with the same owner, same lender, same brokers, same attorneys. Very smooth transaction, except for the fact that it was over the holidays. That always kind of adds a kink to things. And then shortly after that, within another 9 months, the brokers and that was involved in the transaction had another property right across the street. So I ended up very quickly accumulating 3 properties within a 18-month period.
Now, it's interesting to me because I think there's a lot more in that 3 property story than the surface would share. And that is, One of the things you started to build into your own business model, which is different than many people, definitely different than me, because I looked at the very properties you looked at. I walked away from them. They were, in my mind, way too expensive for what they were. Their age was unattractive. The style of property was unattractive, and the price was high because of location. But in your mind, you built this model that it was location that was important. Give me a good location, and I can weather almost any storm, is what you've told me in the past. That has bode you well, has it not?
It has, and I tell you, the secret behind me being able to make those decisions quickly was I've always been a data gatherer, a data miner, and so any kind of endeavor I get into, I try to gather as much information as possible. So in 2008, I was accumulating as many sales comps as I possibly could, and so those prices back in 2008 were almost twice the price. So when the market collapsed, the prices got cut in half. But no one else really knew that. I mean, I'm sure a lot of people knew it, but in my mind, I'm like, wow, I'm getting a 50% discount. But they were still $50,000 a door. Mm-hmm. So I knew they were a deep discount, but folks that didn't understand or didn't realize the sales comps history looked at it as like, wow, why would I pay twice as much for a property that I can buy for half the price? And so for me, the data mining that I did helped me make a very quick decision when I got those phone calls.
I remember you telling us how you did that. In fact, the video you do on how to buy properties, you talk about putting out a map.
Yep.
And taking every sales comp you ever see and plugging it in there so you can see in every area what stuff's actually selling for. That was a great suggestion in that class. But I think there's more to it than even that. I have to share this for the listeners, is that during that time we were buying properties of that same era for $15,000 a door, while you're paying $50,000. Now you're paying half of what they used to sell for at $50,000. We're paying half of what ours were, from $30,000 to $15,000. So the $15,000 to the $50,000 was such a mental leap for me. You follow what I'm saying? That my blue collar mentality just could not get up to that white collar type of investing. But it paid you well, and it helped drive your whole approach to business. Three most important things in real estate, we've heard it forever. I've always laughed at it, thought it was stupid, is location, location, location. And you've tended to prove that is something that's important. So I want to give you the accolades for figuring that out. When we got in here today, I didn't share with everybody this fact. I'm going to share it right now because it's devastating to hear it up front. You've transacted over 15,000 units.
Yeah.
You currently own 62 apartment complexes. You've done 75 apartment complex transactions. I'm sitting with a mortgage broker one day, and I was hearing this guy Robert was on the internet with, and he was talking trash to Robert about how big and important he was. And it's funny, Robert was there, trying to tell him quality meant something, and this guy's going, quality means nothing. It's how much you have. And they said, well, how much do you have? He goes, well, I've got $300 million worth of transactions, and Robert had 250,000 or something like that, 260, and he had like 350. And he said to the guy, the only thing you do is get to 500 million in transactions, then you're somebody. So I'm sitting with this mortgage guy one day, and we're talking about, this fact, and the guy looks at me and goes, you got a Lifestyles member named Curtis Haines. And I go, yeah. He goes, do you realize Curtis Haines has closed $1 billion worth of transactions? And Curtis, the hair on the back of my neck went up. Straight up, like, what? You're the silent assassin. Does that make sense? Nobody knows what you're doing. It's always going on. You're always growing. You're always making things happen. But that was a change in direction for you.
Yeah.
These first 3 deals you did planted you firmly as a real estate investor.
Yeah.
Solid. What happened? Where did that transition go from you just being a one-off kind of guy to all of a sudden taking on massive growth? Can you share that with us? What mentally happened?
I mean, the trigger was meeting a very high net worth family member that triggered that for me. I had the privilege of meeting someone who, through one of my investors, a friend of the family they've known for many, many years. And that meeting led me into the concept of the family office. And how they run their business led me down to the path of being very, very intentional with building up my net worth and building up my portfolio, not for me, but for a legacy, for my little baby girl, and just having a legacy for my family.
Well, before we get into the office, the family office, because I don't think it has much relevance to the statement until you clarify the money that you're moving around. Because, hey, I'm got my family office, my $12,000 is in my savings account, and I'm going to move 2 of it over here.
Yeah.
And family office doesn't make a lot of sense. Millions of dollars. Being able to keep it deployed is what you're talking about.
Yeah.
You brought up a point one day. I asked you, can you tell us, and you're a very, very private guy, and you don't brag, you don't have any desire to shed light on your accomplishments. But I asked you one day, could you give us some kind of representation of what you've done financially since you've been here, being that you have these 65 apartment complexes? You know the description that I'm talking about, do you not? The one about the dollar. If I had $1
Yes.
the day I started. Could you share that with everybody so it comes out in your words?
Yeah, so what I realized when looking at my finances that I started off with $1, and
by the way, he doesn't mean literally $1.
Yeah.
He's saying he doesn't want to tell you how much you start off with, but if I started with $1, this is what happens.
Started with $1. Fast forward to today, I have 5 times the amount in my bank account. And if you look between the $1 and the 5 times, I still between the two, I have 62 apartment complexes, 1.2 billion in valuation on my balance sheet. So I've taken what I started in cash, I've accumulated all these assets, but I still have 5 times the amount of cash liquidity to continue to deploy.
What blows my mind is that you can look up any internet guru out there that says they are the best real estate investor in the country. No matter who they are, you're 3 times bigger than the next biggest guy that I've ever seen. And nobody knows who you are. You've upgraded your wardrobe though. You used to only have black shirts and you wear black jeans and a black shirt. You now diversify, you got blue jeans and a blue shirt. Same shoes.
Same shoes.
You go with the same shoes, doesn't matter what color you are.
Yeah.
So, it's interesting because you don't wear a suit, you don't care about what people think about you, and yet you just keep succeeding. And so now when people understand the kind of money we're talking about, $1.2 billion in transactional assets that you've touched, that $1 you started with isn't $1, and that amount of money you have isn't $5. But what I would like to say is I'm going to make up numbers because it's not your numbers, and then we don't have to say that they're yours. But if you started with $1 million, and now what you got to understand is you have 5 million. Most people say, okay, I started with $1 million, now I own 2 or 3 or 4 apartment complexes, but I've maybe only got a couple $100,000 left in the bank because I invested all. But you have been able to operate where you keep buying properties that are so effective and so profitable that you're refinancing your money back out.
Yeah.
And reutilizing it and investing it again. And that's the part that they've got to understand is that you're playing with house money. If you came with $1 million and you've got $1 billion worth of real estate, of course, it's leveraged, so don't get me wrong, but you've got to have millions invested in real estate. You're on house money right now. And if you have 5 million or $5, as you'd like to say, in the bank, that's 5 times as much liquidity. Most people would think when you're highly leveraged, you don't have any liquidity. How are you keeping both of those working? What is it you're doing? Explain to the people that don't understand this, like we do, because we're doing it, but where's that money coming from?
Yeah, that's the beautiful thing of actually experiencing this firsthand, that snowball effect of reinvesting and redeploying tax deferred. I like to say tax free, but reality is tax deferred dollars. It gives us such an advantage to be able to continue to buy, continue to reinvest. And I'm just trying, that's the part about the family office where in 2000, and where this year, 2018, I've added 5,000 units to my portfolio. That's the intention part where I'm spending more of my time with, instead of having the money come in and sitting here, I got to get it back out. And even with the heightened sense of got to get my money back out, I can't keep up with the money coming in through the refinances, through the quarterly distributions, through the sales. I sold 2 properties this year, another property that's under contract to be sold early this next quarter. That kind of money flow coming in by having that many assets, it could be a full-time job if redeploying the money. And that's the concept of family office, is they have staff that are constantly reviewing opportunities so that when the money comes in, it goes out within 30 days. So my kind of pressure I give myself is I have 30 days to redeploy. So with 1 to 5, I'm still not doing a great job.
Kurt, this is the world's smallest violin, and we're crying for the pain that you're going through being so busy redeploying all this. And I joke because it's just, what else can you say? It's an incredible story.
And I'm having a lot of fun, though. That's the other point.
Well, we're going to get to that.
We're
going to get to that after we get through all this, because we want to make sure people understand. The one more transition in there that I've got to clarify is that you had said I'd never be a partner ever again.
Yeah.
Then you were a lead, which says, okay, I've got partners, but I've got total control.
Yeah.
Now you stepped back and said, I'm going to let somebody else be a lead. And now you don't have total control.
Yeah.
How did you rationalize that change?
Well, again, going back to the family office and trying to redeploy, there's only so many properties that I can buy in a given year. As a lead, as a syndicator, maybe 2 transactions a year. And so I needed to find another avenue that I can go to be able to redeploy, reinvest. And so circumstances helped me get more comfortable with transitioning that control over to somebody else. My assets are still at risk because I'm a key principal in the deals, and so it's very important that I partner with somebody that I feel very comfortable with. And so I look for certain things. I'm just like a lender would look for. It's not just the person, it's the property. So I'm very, very strategic about who I put my money with as a key principal, and then who and what property I invest. And it falls back on the Barcelona deal: quality asset, quality location, and I just add one more: quality operator.
Got it.
So I get the 3 Qs, I'm comfortable.
So do you do any more IRO deals or any more lead deals yourself, or have you just left that all behind?
I pretty much left it all behind. That being said, there was an opportunity that was presented to me that, I feel like I may end up being another lead on. So,
oh, really?
Yeah, it was just a really sweetheart deal in the Galleria area.
So you've got all these deals. How much time do you spend on 65 apartment complexes, reading the financials that come out every month from 65 different apartment complexes? Do you watch that? Do you pay attention to that?
Yeah, so what I do is I track my quarterly distributions, and I know exactly what they have promised. And so as long as my quarterly distributions are in line with the expectations, I'm not looking at the details. But as soon as they're just a hair below expectations, I'm in the trenches trying to understand what's going on. So because of the volume of transactions that I have, I'm not looking every month at their financials, but I am paying very close attention quarterly.
Okay. When you look at the financials, what do you look at first? What's most important to you?
As far as the financial side of the business,
Are there some, you know what I mean? The highlight things that you just look at. Look here, here, and here.
very high level. So I don't want to see payables grow. That's probably the one thing, more like trends. I think when you take a snapshot of the financials, it's not the snapshot that I'm looking for the trends. And so one trend I don't want to see is payables going up. That's for me a big indicator. Another trend I don't want to see is the cash reserves depleting. I want to see solid cash reserves. I want to see a stable trending accounts payable, because you have the ebbs and flows of the vendors that you got to pay. So I expect to see that pretty consistent. month over month. So I look at a 12-month financial statement, T12, we refer to. Those are the two on the financial side, but obviously occupancy. I'm making sure that occupancy is not trending in a certain direction. Don't want it to be going down. It's okay if it has a little bit of dips up and down, but I want to see the pre-lease being up. If occupancy is dipping down, pre-lease better be going up. So those are the things I look for.
Okay. When you're saying that, one of the things that just hit me was one of my highlights is when there were my own companies even, I would always looking to the accounts payable to see how does the accounts payable match up with cash?
Yeah.
In other words, man, if my accounts payable has all these things I owe and, property taxes for the year, insurance for the year, and you see this happen with the rookies all the time out there. They're not thinking they got to pay those taxes at the end of the year. Sometimes they're escrowed. Sometimes they're not. They're paying the insurance on one lump sum at the end of the year. Taxes come up and they don't have the money because they're not watching that accrued accounts payable, right?
We got an accountant talking financials.
Yeah, we're boring everybody to death here, man. I'm sure we are. That's good.
I'm excited. We can continue.
No doubt. Accountant to accountant. Boy, what a terrible thing to do to people. Good point. So let's get off that. Let's go on to something more emotional that they can enjoy.
Maybe we'll stay with accounting.
you built up this portfolio. You're not going to stop building it because it is your philosophy, now this family office type thing.
Yeah.
So obviously we don't have to worry about the legacy. It's going to just keep growing. It's going to keep going. Do you ever think about a couple of these little lightweight questions like, number one, do you think about diversification or the fact that you've got so many different things, is that good? Or is that challenging? Could that be possibly bad? In other words, if there was a downturn, is it good that you're spread out all over the place? Or is that maybe a challenge if you had 8 or 10 of these things start getting challenged at the same time? Out of 46 apartment complexes, 65 apartment complexes, you might have 8 or 10 of them hit a snag if the economy went down. Could you come back with all of your brilliance and battle 10 battles at the same time?
Yeah, so it goes back to the point about quality asset and quality location. I was, my very first apartment complex was in the worst possible economy. And experiencing what that was like in 09, 010, 011, what I did realize is if I keep on that quality asset, quality location and the market corrects, we're still going to be fine cash flow wise. And so I don't think I would be comfortable buying certain assets in certain locations because when the market does correct, those are the ones that's going to get hit the hardest. I refer to them as high crime locations or dead zones. Dead zones to me are locations that have no story of future development. They're just, 10 years from now, if I'm driving up 45 North, Mattress Max will be the only business that has grown. Mm-hmm. All the other businesses are going to be pretty much the same. So if I continue with my acquisition mode of quality asset, quality location, and quality operator, I'm not stressing out about what happens when the market's going to correct. We're on our number one, the longest economic cycle in history. We know it's going to happen, right? It's a matter of, is it this year, next year, 3 years from now? So I'm comfortable with the assets I have. I know that if I'm talking to a financial advisor, they're saying to me that I am not diversified at all. I got all of my assets in one asset class, right? Mm-hmm. But from a real estate standpoint, I'm pretty well, I have properties in Houston and Dallas and San Antonio. I have properties outside of Texas. So I have different asset classes. So I'm comfortable with my concept of diversifying, and I'm comfortable with my selection of assets. So when the market does correct, I may not make a high return on it, but I know I won't be in a cash crunch situation.
You just answered two next questions I had, which was, what do you feel about diversification across lead investors? And you've already explained it. Well, clearly, how many different lead investors of this 65 apartment complex, how many different leads is that?
Wow, that's a good question, Dale. I don't think anybody's asked me that. I would guess I would say, let me think about this. I would guess 12 to 14.
Wow, that's not very many
not
for
very
65.
Many.
So you've picked some stallions and you've rode them, huh?
I was thinking averages about 4 to 5 per lead to get me to that number.
It gets easier with that each one you do with a certain person, though.
Yes.
Huh?
Yes. I mean, I think the biggest risk I have, just like hiring an employee, you never know until you hire them if they really are going to work out for you. The biggest risk I have is partnering with somebody for the first time. So when I do find somebody that's consistently meeting and exceeding expectations, I want to stay with them. And on their fourth property, the fifth property, and the sixth property. So
have you ever found somebody yet that you got on board with and then you didn't like what you saw once they started operating?
You know, I did. I had one situation where I didn't like the way they communicated, and they were not timely on the financials. They were meeting the quarterly distributions. Actually, they were exceeding expectations on quarterly distributions. The property's doing very, very well. I think they're a quality operator, but the lack of communication and the lack of consistency in the financials made me a bit nervous. So I more than likely will not want to invest that person again unless they change their ways, which they could easily do that. But I did have a couple of folks, just like you mentioned, when your spider senses come on, it's like they're wanting me to do business with them, and there's just no way. There's just no way. There's something, whether it's it's the spider senses, that spidey senses that come up like, I don't care how good of an opportunity, I don't care how good of a quality location, I don't care how good of a quality asset, the quality operator piece is what's scaring me away.
You know, in your mentor position, I think I made a comment, and we had a mentor group email the other day.
Yeah.
And I made a comment, you know, we've had, in the last 12, 18 months, we've had 2 really bad operators out of hundreds of deals that were done in the last year. And you know what's funny is that both of those bad operators, I didn't like the people up front. Well, not like them's not the right way to say it. I didn't feel comfortable with them. You know what I mean?
Yeah.
That when I was around them, your spidey senses, as you call them, said, boy, this person's just full of it, you know?
Yeah.
And it ends up being the person that's full of it, you know? And it doesn't come through. So I think there's a little bit of that, but I think a beginner doesn't know that. And that's one of the benefits of having a mentor. But as a mentor, do you call that stuff out? Do you share your spidey senses with people when they come to you?
Yeah, that's a fine line I have to be careful with. So if there's an open PPM, I really can't say something like that. But if I know the person doesn't have an open PPM and someone's wondering, hey, what's the word on the street on somebody? I'm very happy to share my feedback with folks. You know, the word on the street of, hey, what's the word on the street of Curtis? Or what's the word on the street with Bob, right? I'm happy to share that. Just like if I'm hiring an employee, I'm going to do a reference check, but at the same time, I'm going to call a few friends that know this person. So I'm going to try to find what the word on the street is. So I can share it most of the time, but there's certain windows I can't.
Let's move on to the mentoring aspect of this conversation, and that is, we contacted you. I don't remember who specifically contacted you, with me at a bar in a drunken stupor, begging you on my hands and knees, please come mentor, or if it's actually John or somebody or Lynn. But somehow we conveyed to you that we'd like to have you on the mentoring team. What was your first thought about taking on the responsibility of other people's businesses when you were so, involved in your own business?
Man, I tell you, right? For me, it was just a definite yes right away. I mean, the way you have created lifestyles and the concept of giving back, I was already helping other folks, and there were so many people when I first joined that helped me. They weren't mentors, they weren't paid for anything, they were just helping. And I think that gratitude that, hey, Dell made me successful, I want to help someone else be successful. Well, so many people helped me, I started helping as many people as I could informally. So when you came to me and said, hey, would you be open to a mentor? I'm like, absolutely, love to.
Yeah, I'm laughing to myself because I can't remember if it was you or if it was Lee Carroll or somebody, one of the two of you. We had asked to mentor, and somebody, and they were going, well, I don't know if it was you or Lee that said this, but one of them said, I don't know, blah, blah, blah. And somebody said, hey, look, you're already doing it. Why not get paid to do what you're already doing? Was that you or was that Lee?
I think that was probably Lee.
That was Lee. And it was, the joke is, you go to Lifestyles, and the number one thing people say to me when I post-interview them from the questionnaire from the 2-day, or even past that when they become successful and they come on Dell, number one thing that they were surprised was how open people were about their finances and their business knowledge. It just blows them away.
Yeah.
And so guys like you and all the other guys that are successful are just giving. And so, like you say, just to get the chance to do it officially is just another step in the deal.
Yeah.
What is your feeling about the national aspect of investing? We're seeing people, Curtis, show up all over the country.
Yeah.
People from Houston are showing up in other cities all over the country. They're doing case studies and road trips, buying into deals there, finding investors to come back and do deals where they're at.
Yeah.
All over the place. What is your thoughts on all that?
Yeah, I first of all love it because it definitely gives everybody more opportunity to invest as a passive or to be a lead or be an IRO. So it's broadening, I think, the reach that you have, and I absolutely love that. When I look at opportunities in Houston, I'm not a world traveler. I was born in San Antonio. I grew up in Turkey. My dad was military, and we did all my traveling when I was so little. I didn't really appreciate it. I don't know if that's the reason, but today I hate traveling, and so I'm not a world traveler. Pretty much Houston and Texas is about as far as I'm going to go. When I'm looking at deals in Houston, there's a lot of areas I don't know what's the driver behind it, local like LaPorte or Texas City or Baytown. And so when you start opening up the national reach, it's kind of the same thing for me. I don't know or understand LaPorte and what's the economic drivers. I'm looking at a deal in Atlanta. I got to figure out, hey, what's the local economic drivers for Atlanta? So I like the challenge of trying to figure that out. I like the opportunity to meet folks that live in certain cities that know the local market better than anybody else would. And that gives you an opportunity to have, I think, a great investment with somebody who knows the local market. Like I know Houston, they know Atlanta kind of thing. And so I just love it. I love the national reach.
I think there's a yin-yang to that. And I'll tell you what I mean by that. When I first started 32 years ago investing, there was no Lifestyles Unlimited. Every single program, Dave Delgado, Robert Allen, Jeff McCone, Tommy Vu, the Mylans, Ron LeGrand, Carlos Cheese, Robert Kiyosaki, all those guys, their program was buy and flip houses, buy and flip houses, buy and flip houses. Nobody was talking about apartments. Nobody was talking about buy and hold. It was something completely different. So when I went out there was all this gigantic virgin market in Houston of these crappy little properties that had been mom and popped to death. And their upside potential was unbelievable. It was just almost incredible. Some of those properties now, and I figured out one time at the time I was looking at them, there was only 600 properties in the city of Houston that were below 50 units. It's a weird number, something like 600 units that were below 50 units. And I go, we probably have owned almost every one of those 600 properties within the 30 years that we've been here, the 29 years of Lifestyles. And we buy them and sell them and buy them and sell them, buy them and sell them, resell them, resell them, resell them, resell them. And so one guy buys it here and, he adds value, makes his $1 million off of it. Next guy buys it, adds value, makes his $1 million. And it started out at $300 a month for a one bedroom, and now it's $750 for a one bedroom. And 5 guys in between have made $1 million off the deal, right? But what if you could go to a market where no Lifestyles, no, like RIAs, where all these real estate investor clubs, all the RIAs are into flipping and remodeling and whatever you call, wholesaling and whatever. None of them know anything about apartments. You could go into that market, and it's all dumb mom and pop people. I see just massive upside potential to go into one of those markets and find one of those deals. And instead of taking the $1 million out of it each time for 5 or 7 years, go in there and take $2 or $3 million out of it right away because you know so much more than the marketplace knows. What do you think of that thought?
Yeah, absolutely. I mean, it goes back to the opportunity, to have the opportunity to do that. I mean, just duplicate what we've been doing here in Houston to other cities is just phenomenal to me.
Take some of the stories. Scott Van Ostrin goes out to the East Coast where he used to live, where he grew up, where he got married, runs into this deal. They set the deal up where the guy that's selling it to them is the property management company The property manager comes, I don't want to own it anymore, but will you manage it? So it never changes hands. He doesn't have to do a thing. He buys it. It's cash flowing from day one. Then he makes a deal with them. I'll buy anything else you guys want to let go of to deploy your capital somewhere else. And so he's sitting there with a gold mine. He made this deal to where now he'll do deal after deal after deal, an incredible arrangement. It's a gold mine.
Yeah.
Right? You just go down the line like nobody was in Corpus Christi.
Yeah.
One day, somebody went to Corpus Christi. Next year, we own 11 apartment complexes in Corpus Christi. Those are the kinds of opportunities that I see just blow my mind that we're going to hit somewhere. You know,
Yeah.
we're going to hit out of state. We're going to find this little town and go, that's where we all need to be. And we're going to plant this flag there called Lifestyles Unlimited.
Yeah.
You know, one of the interesting things when I do the 2 days is that I make this statement, there's no 2-mile radius in Houston, Texas, we don't own a property. No 2-mile radius. You think about it.
Yeah.
Anywhere in the city, you could find a property pretty close, could you not?
Yep, absolutely.
Because we own stuff everywhere, which is an interesting point. So let's realize that you're probably making a lot of money, and I know that you don't want to go into that, so I won't even take you there. But obviously, if you're able to deploy more and more and more and more and more millions, then obviously you have to be making those millions. The way you're doing it is tax deferred, as you're calling it, which could be tax free if you just go ahead and die someday.
Yeah.
But you know, it's tax
We'll hold
deferred.
off that strategy
Yes,
for a while.
it's tax deferred, right? And so financially, you're set.
Yeah.
I mean, there's nothing there to think about. So let's go deeper. One day, somebody told me you had cancer and had survived it. And during that entire time, you were buying real estate, and I didn't even know. I don't know how many people you conferred with or let it in on that secret.
Yeah.
But you never let it out. And you went through. What went through your mind when you were going through that?
I mean, it's kind of hard to say what was going through my mind other than just trying to get through each day at a time. I mean, so I had stage 3 colon cancer. It's fortunate enough to catch it in time, but after 2.5 years of surgeries and chemo and radiation treatments, my body was just, taking some pretty tough stuff. Within the real estate side, most of what I do is I can be on the phone and transact. I can sign electronically, but during those points in time where I was really offline, I had my area supervisor step in and do all the other things that I was doing, and which I didn't realize. I like working, so I didn't realize how much I was still doing. Although I was still working more and more on the business, not in the business, there was still a lot of details that I was doing as a lead with my properties. And so my 2 supervisors and maybe 2 or 3 other people knew the challenges I was going through. I handed off all that to them, and they helped me get through that 2.5, 3 years of the worst possible time. Now, the funny thing is, I never took that stuff back. So
what a great excuse to dump it off on somebody.
So that's really cool, because now when I had my baby girl, who is now 15 months old, that void of that time that I spent on that I handed over to my 2 supervisors, I'm able to spend time enjoying with my little girl.
We're going to get into the kid here. I just want to reiterate something. I call you up. I say, Curtis, I'm in the hospital. They're taking my colon out. You can relate, right?
Yeah.
And the deal of my life, the one I've been looking for forever, you know the deal because you were helping another guy go after it. I was going after it. It ended up falling in my lap. And I'm calling you saying, hey man, I got need somebody to bring the paperwork to the hospital. I can't get out of the bed to sign this stuff. Have you ever closed deals while you were in the hospital?
No, I was fortunate enough to be able to get everything done before.
The timing
worked out well. Yeah.
Man. I was stuck in there, and I want to thank you publicly because at that time when all this feasibility came due, I literally came out of the hospital, right, with a tube in me to do feasibility, and you had rallied the troops to get the feasibility and done the lease audit. it really made me realize the power of lifestyles and
Yeah.
the people here, what could be done.
And I'll say this too, Del. Some of my lenders have required me to have what's referred to as a springing manager. And basically, if something were to happen to me and get hit by a bus, a person would be springed into action to take over a transition of the lead role. The beautiful thing about lifestyles and the networking and the people that we've been around for years and years and years, there could be 5, 6, 7, 8 people that be willing to step up and help with transitioning any one of my properties if something bad were to happen to me. And so I feel very comfortable. And when I was going through the really depth of my times, I had at least 3 backup folks that, hey, if something didn't quite work out, I knew that my partners would be okay. I knew that my family would be okay, because the businesses would not miss a beat.
That's interesting, because I wanted to ask you this question. I think we discussed this briefly at time past, is that at that moment when you didn't know, I mean, nobody ever knows. I had cancer, I survived it. I didn't have the kind of fear that most people had. I kind of like, yeah, I'm going to get by this, I don't know if that's just ignorance and just go, I'm going to do it, and you've always believed in yourself, and you think you got the Midas touch or whatever. But whatever reason, I didn't really worry about it. But you said something to me one time I thought was really interesting. You said, I realized I had not spent much time sharing with my wife where my stuff was at.
Yeah.
And you had to take on a new approach at that point. Can you share what it is you and I both went through? We talked about this, where we had to all of a sudden start clarifying. I mean, we keep all this stuff in our head. We have files and stuff, but you dump that off to somebody that doesn't have any idea what we're doing. And man.
Yeah, that whole transitioning of what would happen if you and I didn't make it tomorrow. And that experience helped me kind of really, I think, formalize that transition. Because I knew informally I can have Ira or Scott or Lee or any number of people step in and help with the transitioning of any one property. But what would happen to all the personal assets on my family side? So that's when we engaged an estate planning attorney to help set up the trusts and set up the wills and really define, hey, here is where all the bank accounts are. Here's where all the passwords are to everything. I mean, as much as you and I know you track everything just like I track everything. And so I know where everything's at, and I know where money's coming in, and 20, 30, 40 different bank accounts you have to be protected with FDIC insurance. So I just formalized that whole process.
Yeah, I did too. I put the whole thing down on spreadsheets. And not only that, I started teaching Melissa, hey, let's look at this month's review.
Yeah.
This is what we're looking at. This is what we're looking for. Did we do well? Should we should we look for a new move?
Yeah.
And teaching her to run the family office.
And the beautiful thing from technology is everything that we have is auto pay, and it's coming out of a bank account. Yeah. So I don't have to worry about bills. I don't have to worry about anything that
is different.
Yeah,
in the old days, man,
different.
You be an accountant, I remember when I had 100 houses, let's say I worked 4 hours a week to manage them, 3 hours was accounting. You follow what I'm saying?
Yeah.
Collecting the money in, getting it in the bank, making sure all the transactions, paying all the bills. 3 hours of it was accounting. 1 hour is like, my toilet doesn't work. Okay, I'll send a plumber by. I mean, there was really no work to that part. We're going to go somewhere else.
Okay.
We're coming close to the end of the interview. The child.
Yeah.
Late in life. My child came late in life. What does it mean?
And I think that was probably the best thing that came out of the cancer experience. If there's everything.
How does that come out of cancer? You got to teach me something about that.
Yeah, that
physically, I don't understand that.
That was the best experience, because while I was going through the treatment, not knowing if I was going to make it, I think the one regret was not having a family. I was fortunate I've been married I met my wife over 22 years ago, and we have separate lives. She's a successful musician, and she travels and plays in gigs, and we just let time escape us. We always had intentions of having a family, but we got busy. Mm-hmm. And so over time, it just kind of been one of those things that we kept on putting off. as soon as I was fully recovered, we were gung-ho 100% of we're going to have a family and we're going to have a kid. And at that point in time, we had a 5% chance because I spent almost 3 years of radiation and chemo treatment.
Mm-hmm.
And so we look at what we have Sydney as our miracle baby because it was a 5% chance of her actually making it. So
now that she's there, what is it? How has it changed you?
yeah, I mean, it's just, I'm joking. If we had Sydney 15 years ago, we probably have 10 kids running around. The joy, the fun, the experience, I would love to have more, but obviously with our age, we're blessed to have one, so we're going to stick with one.
That's excellent.
Yeah.
So you've come full circle.
Yeah.
What's next?
I would say continue what I'm doing, Del. I'm just having so much fun helping other members. I'm so grateful for what you've done for me. I want to help so many other folks kind of do what I've done, what you've taught me, what you're teaching everybody else. And so I just want to continue to do what I'm doing, which is helping other members at the same time building my portfolio.
Well, I want to thank you because you're an inspiration, and you know I don't like motivation. You're definitely not a jump up and down scream motivation kind of guy, but you are the best inspiration kind of guy. You've done it. You've gone through hell to get there. You made it happen anyway. You perfected it. You changed the model. Now we have hundreds of people that are building passive portfolios and working out of this family office model that you've established. You've taught classes that are incredible. So there's legacy that's down on tape. You've mentored many, many people. I don't know, hundreds of people you've mentored. And just think about the people you've touched when you talk about 15,000 units that you've had transactions with, of the people who live there.
Yeah.
And the quality of the life quality of these people. Think about the vendors that get paid on time. You think about the employees that have a place to work. And all of that comes out of this, this little nucleus of you and your belief system. That's a wonderful thing. So thank you very much. We all appreciate it.
Thanks, Del.
Thanks for coming in. And for the rest of you out there, remember this. Curtis knows it. It's not the money. It's the lifestyle.